Welcome to SB Talks. Today is Tuesday, June 16th. I'm Vincent O'Neill and I am joined by Nick Ryder. Welcome, Nick.
Thank you, Vinny.
Now today, Nick and I will be discussing the Middle East and the interim ceasefire deal, the SpaceX IPO and US government suspension on the latest Anthropic models, as well as central bank outlook as the Reserve Bank of Australia meets today. Welcome to all our listeners. Let's start with developments in the Middle East. Over the last 24 hours, we've had news of an interim ceasefire deal. I guess certain elements materially still up in the air, but the most positive aspect is potentially, well, one, hopefully a cessation in the violence, and two, reopening of the straits, at least for 60 days.
Yeah, so there are reports that the deal has been signed electronically in the last 24 hours.
Is that our first DocuSign international treaty? I don't know.
Auto pen. But a formal signing ceremony will be held, I believe, in Geneva on Friday. So it does look like a deal has been agreed. We don't have a lot of details yet. Apparently they will start to come out after the formal document has been signed later in the week. But what we do know is that there's an extension of 60 days to the ceasefire, that there will be toll-free shipping.
Passage through the straits.
Passage through the strait and the removal of the US blockade of Iranian ports. And that over the next 60 days, they'll start to negotiate things like the nuclear deal, as well as potentially releasing some of Iran's frozen assets, foreign reserves and things like that. Although that's all a bit vague, I guess. There's not a lot of clarity on how much money will be provided to Iran over the next 60 days.
Yeah, I heard a few reports of between 12 and 24 billion, which is a material amount of money, but not necessarily in the scheme of the recovery and the rebuild there. What has been interesting is a lot of the reports are, over the last couple of weeks, that Iran does seem to be becoming increasingly motivated to try and get to a deal as well. Certainly the US was motivated to a deal, but potentially the impact of that blockade was having the economic consequence.
I think so. I think they both had an incentive to come to some sort of arrangement. Although I did see there are protests from sort of pro-hardline IRGC officials in Iran saying, oh, why did you sort of capitulate? So even within Iran, there's potentially some disagreement between hardliners, but generally, I think they did need the money. Obviously, very dependent on export revenue from oil shipments, and they haven't been able to get those. There are also reports that there's this sort of $300 billion reconstruction fund that would potentially be funded by Gulf countries, potentially dependent on Iran sticking to some of the deal, so sort of financial incentives to help rebuild the country. So not a lot of detail yet on that, where
sort
the money
of a
would
regional
come.
development fund and trying to heal very strained / broken relations in the region after the conflict.
Yeah. And potentially companies going in there and helping extract oil and minerals and things like that. So who knows? I think this is one of the things that's been floated. And there's also, I guess, not a lot of clarity over the conflict in Lebanon between Israel. Israel's obviously not a party to this agreement, and they apparently are not happy with this agreement, particularly if it gives money to the Iranians. Potentially help fund their proxies, such as Hezbollah. So I think it's still very fluid, but certainly the markets liked it. The oil price is back down to $83 a barrel for Brent, roughly where it was in sort of early March after the conflict started. Still quite a bit higher than where it was at the start of the year. So definitely sort of moving in the right direction.
Yeah, but a lot better than $100 or $120 a barrel, and I guess every week or month that it continued at those elevated levels was starting to have more sort of inflationary bedding into the system.
Yeah, and I wrote recently in the monthly commentary that I put out a few days ago that there are reports that oil and petroleum product inventories were getting very low and that if the Strait didn't reopen soon, that we could hit a sort of inflection point where oil prices would potentially spike quite a lot, potentially up to $150 a barrel, to kind of get that demand destruction to counter the loss of 12 million barrels a day that isn't flowing through the Strait. I think that said, we've still got to be cautious. There's still going to be a premium in the oil price, as much as the fact that the Strait is theoretically open. A lot of shipping will want to see insurance, mines removed, and I guess there's still a big question mark about what happens after 60 days, whether Iran does have some sort of tolling arrangement. I've heard reports now they're talking about charging an administrative fee, so
A carbon footprint fee.
or whatever it is. So it's a bit unclear what.
That's a good point, that one, because it's fair to say we're certainly not back to where we were prior to this conflict. Risks are still elevated.
Yeah.
It is a positive development from where we were a little bit more in limbo 2 or 3 weeks ago, but there's a lot of ground to be covered for us to be considering that completely drawing a line under this one.
Well, that's right. And also for the full flow of oil back through the Strait, and it takes, potentially a couple of months for that oil to, transit to Asia, to get refined, and for those inventories to be rebuilt. So I think we're still going to see high oil prices over the next, 6 months or so. Yeah.
Perhaps around the mark that we're seeing right now.
I would also caution that the original JCPOA deal that the US signed with Iran under Obama administration in 2015-16, which Trump tore up, that took 20 months to negotiate. It was a 150-page document. According to negotiators that were there, it was very intense. It lasted 19 days straight. The Iranians are apparently pretty tough negotiators. So I'm not sure whether 60 days is enough time to get a kind of comprehensive deal that, deals with potentially them agreeing not to enrich uranium for 15 to 20 years, which is what is rumoured, and to dilute the existing weapons-grade uranium back down to more lower levels of enrichment.
Yeah, look, that's a really fair and true point. Like 60 days just isn't enough time, I think it's fair to say. And we probably have seen this before. The original ceasefire agreements are a lot easier to achieve than anything that's deemed to be a more lasting and substantive agreement. So it'll be a watch this space, albeit we've taken it one notch down on the risk register at least, and hopefully we do see the Straits reopen and some of those pressures on energy markets and inflationary pressures more broadly begin to ease.
Yeah.
We spoke in the last podcast in excitement and anticipation of the SpaceX IPO. Now, I know that you barely slept over the weekend as you sat up and watched Ringing of the Bell and other such things. It did get off of a pop, launched at about a 1.78 trillion valuation, and then and that was at $150 per share, had about a 20% pop off that saw Elon Musk head into trillionaire territory.
Yeah, and day 2 up another 20%, so $192 a share. That gives the company a $2.5 trillion valuation. It makes it, I think, the 6th most valuable company in the world, ahead of TSMC, Meta, Broadcom, and closing in on Amazon in terms of market value. And these are companies obviously generating very substantial profits.
Earnings and profits, yeah. We spoke a bit on the last podcast regarding, I guess, excitement/exuberance on the valuation, and I guess that has continued post-float.
Yeah. Well, I've said, it's there's a reasonably good business. It's basically a satellite internet business called Starlink in there, and that's bolted to a CapEx money furnace, which is XAI, spending very heavily on developing its AI capabilities. So I think it remains to be seen, when this company becomes profitable. And how the stock performs sort of longer term. In the short term, it can do anything.
There's a lot of excitement around it. Let's maybe take it a step further and I guess one element where people can make a choice of whether they're invested or not invested in SpaceX and do their due diligence on that. A lot of money in the markets, and a growing portion of the money in the markets will be held in index funds and ETFs. Can you talk a little about how their valuation as it stands today will begin to gradually transition to play a part of those indices?
Yeah, so there's stocks being fast-tracked for the NASDAQ index, I think in the next 2 weeks, as well as the FTSE index, others like S&P, there's no necessarily pathway. They tend to look for companies that are profitable and have been listed for 12 months, so we'll just have to see on that one. But certainly, there is quite a lot of money following some of those other indices, or MSCI is another one that will include it. So there will be some index buying. But that said, there will also be a lot of shares held by insiders that get released from escrow, lockup, over the next 6 months.
Let's talk about that. So what we're talking about, how much is actually free float trading on the market versus held still by private individuals? And that is a factor about how heavily weighted the indices may have to this position.
Yeah, so there was 555 million shares issued in the IPO, I think, plus another 11 million in the green shoe. And over the next 6 months, another 3.3 billion shares get unlocked. So it's quite a big supply potentially of shares that come available, and need to, if those people want to sell, not saying that they do, they potentially, you need demand to match that. So potentially some from those index buyers, but that's not enough.
The index buyers will not be enough to soak up if all those people choose that they
probably
want to sell.
not. No.
Yeah. So that is sort of helping to equalise. I guess one of the themes around this has been buy now to sort of get right up the index buying that's coming. You're saying there's still quite a bit of shares drifting off escrow that can help offset potentially some of that demand.
And the big index funds, the big ETFs in the US that tend to track the S&P 500. And it's not getting included in that index. So there's that.
Yeah. So watch this space, but certainly got a lot of fanfare and certainly added to the AI hype.
Yeah, it's a concept stock, a million people living on Mars, data centers in space, all this sort of stuff. It's the whole Elon, he's been successful, let's back him, including reports that Gina Reinhart's put $1 billion into the IPO. So yeah, there's a lot of hype around it, but as I said, cautious on the valuation. Particularly when you compare it to companies that are actually generating strong profits at the moment.
Yeah, well, you're talking about the AI boom and the spending, and it's leaped ahead of TSMC is a pretty good example of the level of exuberance that's just associated with right now. Now, AI has also been in the headlines in the US or globally based on the US government's suspension of the use of two of the newest models from Anthropic, Fable 5 and Mythos 5. Tell us what that's about. The Mythos in particular has had a bit of hype around its power.
Yeah, I wrote about this in SB News a couple of months ago. Mythos 5 was their super powerful model that they said it was so dangerous they could only release it to a certain group of companies to test.
To trusted individuals. The fear was that it could break security systems.
That's right. It could find vulnerabilities in systems that had previously been undetected. They finally released it in Mythos 5 and a tuned version called Fable 5 that had some security guardrails around it. And it had been released for about a week or 2 weeks to mixed reviews. People are saying that the guardrails were too strict and it was actually preventing them from getting the full use out of the model. But on Friday, I think it was, the US government ordered them to stop providing that model to foreign nationals, including those living in the United States. And that included potentially Anthropic employees, many of whom are there on, H-1B visas and things like that.
And what was the trigger for that?
They said, it was able to be jailbroken, where if you provide a certain prompt to it, it would do things it wasn't meant to do, or find some sort of hacks in some software. It's unclear. Apparently someone said, well, actually all of the models, all the leading edge models could do that. So it was it was unusual that Anthropic was singled out. But I think it is potentially starting to show that maybe US government is getting a bit sensitive to some of the capabilities around these models, as you know, these increasingly running up against sort of national security interests. And of course, there's a broader backlash against data center build-outs in the US.
I was going to say that. It's become quite a political hot potato in the US. There's definitely been a sort of a class association with data centers seen to be the evil source of AI and the potential eliminator of jobs. So it's becoming a more populist issue.
Yeah. There's the whole noise of data centers. If you live near one, they're quite noisy. All the fans running all the time. There's the impact on people's power bills because there is potentially an impact on power bills from the build out of infrastructure and power infrastructure needed to power these data centers. It's not fully being allocated to the data center itself. So there's that. And then there's the fear around jobs. So, there's been a lot of sort of backlash, particularly young people saying, I don't like AI, I don't want to use AI, it's threatening my jobs and it's making us all dumber. So a lot of states in the US now are bringing in their own AI legislation for that state, and the federal government was very much hands off, but now we're starting to see even the White House putting some limits around AI. So I think it's interesting to see where it goes.
It's a good, I guess, it's watch this space. We're now seeing these sort of discussions, which they have been going on for a number of years already, but now it's really at the forefront of government's attention.
You might recall that Anthropic and OpenAI have both filed confidential S1s, which is the documentation you need to file before you push ahead with your IPO. So this is a cloud potentially hanging over those IPOs. SpaceX got out.
I was going to say
that first mover advantage.
You saw that SpaceX launch number and the big boost that it got post-launch, and they thought, well, let's just quickly get on the back of that. But that's probably dampened that somewhat. They want to work their way through. They'll need to work their way through this before they can probably go to IPO.
Definitely.
Central banks in the attention again. We talked before about obviously oil prices and inflationary pressures around the world. RBA meets today. Not a lot expected. What are you looking for?
The RBA meets today. We're not expecting too much. I think the interesting thing will probably be the press conference from Michelle Bullock after the meeting. They said previously that after the 3 rate rises, they've got space to sit back and evaluate. So I think they'll probably maintain that theme today. So not a lot we're looking for today from that.
It's fair the markets are now really pricing out expectation of further rises.
I think what's happened is some banks have said that the changes in the federal budget to capital gains and negative gearing potentially have an impact on the property market, which has a wealth effect. So if we see property prices coming off, falling potentially, that could slow the economy, slow consumer spending, slow activity broadly. So it's doing some of the RBA's work for it in some ways. So they're saying maybe the RBA doesn't need to go again because of the federal budget changes.
Certainly buys them more time to sit back and watch how things play out. What about elsewhere in the world?
So we get the Bank of Japan meeting today. They're expected to lift rates to a 31-year high, 0.75 to 1%. They have an inflation problem there, particularly given how weak the yen is. So obviously they import quite a lot, including energy products. So they'll be lifting rates. Well, it's likely they'll lift rates today. We had the ECB, they lifted rates last week from 2 to 2.25%. And we get the Fed meeting later this week, which will be Kevin Warsh's first as new Fed chair. So
we spoke on the last podcast, his ability or flexibility to make a move is not what it would have been some months ago, but I guess a lot of anticipation around what commentary he may offer.
Yeah, so inflation in the US gone from 2.4% in February to 4.2%. A lot of that's obviously energy related. Core inflation's 2.9, which is still well above the Fed's 2% target. So yeah, he can't really cut rates.
Not a lot of room to move.
Not a lot of room to move, but I think people once again will be looking at the press conference and the commentary that comes out to see, what where he's leaning and what his style might be as the chair of the Fed.
Is there any broader signalling at play?
Yeah.
We shall see.
Yeah.
An excellent summary, as always, Nick. Thank you very much, and thank you to all our listeners.